Hello, everyone, and welcome to another episode of the Trader's Mindchat show where we dive deep into the psychology of trading and the mindset that drives success. Question for you. How often do you find yourself frozen, unsure of whether to sell because the price could go either way? If this sounds familiar, then today's show is for you. Today, we're tackling the age old question of when to sell. And more importantly, how a structured trading business plan can eliminate this uncertainty so that you always know what to do, when to do it, how, and why. So, drop a comment into the chat if you've ever been stuck in a trade because you didn't know when to sell. I'll answer questions throughout the show, so please feel free to ask. Drop your comments in and go ahead and let us know that you are out there and alive. I already see a comment from Caleb. Hello, Caleb, over in Holly Springs, North Carolina. So let's hop in and start talking about why this is so hard. One of the most common issues traders face is the fear of missing out, and better known as FOMO. And a lot of people are feeling that way right now. In fact, if we pull up the market real quick, just to take a look at where things are now and how they got there, here's a look at the charts from the last couple of days. So the market was had fallen, consolidated over here last week. Then this week, it's been up and away with a brief shakeout on Wednesday, reversal, and so far the market is up about 4% on the week, and that's something that can induce a lot of FOMO. So how does one go about doing it if that's something where you're thinking about, well, could price shoot higher? But you know what? We're kind of getting to a resistance level over here. Maybe price could crash. The common thing that happens to most people, and this happened to me for a very long time, is that you become frozen. Frozen with fear. What am I going to do if price moves that way or the other way? And because you're frozen, you end up losing either way. You either lose capital, physical capital, or mental capital because you're so worried about what's going to happen. So I want to discuss how emotions like fear and greed tend to override logic. The thing with fear and greed is that they tend to pop up because we don't know what to do. We don't have the exact steps lined up how to do, or we have an idea. We have an idea. Maybe we've read a couple of books. Maybe we've watched a couple of shows. Heck, we might have even signed up for a couple of services that will help us figure out, well, here's where I buy and here's where I sell. But if you don't have the buy into it, if you don't have belief in it, if you don't have conviction in what you're doing, then that's when it becomes real tough to say, you know what? When I look at this, I'm going to buy, or I'm going to sell, or I'm going to sit on my hands. So, one of the things that we got to do is begin to dissect some of our beliefs and write them down and figure out where they came from and why, and if these beliefs are serving us or if they're not. And if they're not, then we need to put something into that pot that will serve us better. So that's that. Well, we've got a couple of questions coming in. Well, let's see what we have here. Caleb says, I have known when to sell and I still didn't want to lose, but I already had the loss and was only deluding myself. And that's fairly common too, Caleb. And uh, there's very little I would say that I haven't experienced personally. And you know what else? These kinds of feelings, they they're still in the back of my mind, even after 25 years of trading. The thing that keeps me from not acting on those kinds of feelings when they do pop up occasionally is the continuous reinforcement of the rules of plans, and also reminding myself of a number of other things that we'll talk about right now. So, your trading plan really is the solution to all of this. This is where having a solid trading business plan really can make the difference. Your plan is basically like a compass. No matter what's happening with the price, it points you in the right direction. So when you're looking at the market and you're seeing that, yeah, price rally, but we're at resistance, what should I do? That's answering the question of what should you do. Those of you, a few of you are that are watching are already a part of my coaching program. A few of you might be in our research program, and those of you that are, and even those of you that have watched the show a few times, you know that I like to break markets down in three different ways. I like to take a look at the overall market. I like to take a look at how the stocks that I'm interested in are performing. So I have this universal list and I keep track of what it's doing. And then I take a look at my own personal performance, and where those three things meet, that's telling me, okay, I should be aggressive. I should be pretty light and sitting on my hands. Now, it's a lot less about what I'm looking at and why it, but the structure of understanding your environment, understanding the types of stocks that you're interested in, and understanding how your personal performance is, that's going to help you quite a bit. And that's some of the key components of the business plan. So, what a trading business plan does for you. What it tells you what to do. Your plan outlines exactly when to sell based on predefined criteria. It's going to tell you when to do it. It provides timing rules for different scenarios, whether it's a target that's being hit or the market behaving in a way that maybe goes against what you thought that it might be doing. It tells you how to do these things. Your business plan is going to give you the specific actionable steps, whether it's a trailing stop, partial exits, something that I like to use, which is called danger signals, which basically weighs out the weight of evidence and says, you know what? There's so many things that are going wrong with this stock right now. It's time to sell. Or it also helps me figure out, you know what? It's just having a bad day, and there's other elements here that outweigh uh, what's happening. In fact, that's something that happened with the stock that I'm holding right now called VIRT. I'll share this one with you. Here's what's happening in VIRT. So the other day, well, when price was trading down here, I've held the stock since down here, right? And I'll put the annotations back on for a second. So I bought right down here. I've held, and I'm still holding this. I'm still holding half of my position at this point. And on this day here, when the market started to reverse and price was falling in, that day was a little bit hairy. It started to have a slight change in character. You might notice, for those of you that are more familiar with charts, you might notice that on that day, you closed below that green line. That green line for me is the 10-day exponential moving average, and it has some significance. But because of my rules and checking out the various danger signals on that day, I saw that there were only 4 danger signals on this day. So look at the plan. I've got my plan memorized, but look at the plan. Plan says hold. So simple as that, right? No stress, no mess. So, and here we are a couple of days later. And it's not that it's meant to predict. Sure, things worked out pretty well for me in this case, but the plan is taking a look at the aggregate, right? So you have 100 trades. What's going to lead you to more money in your pocket at the end of the 100 trades? That's what your plan should help you do. So let's continue with breaking down some of the plan components. Here are some of the must-haves for your trading plan. Take some notes. If you have questions as we're going through this, please go ahead and put them into the chat. So the first thing, the first key element of your trading business plan is going to be number one, define your exit strategy. Right? There's lots of things. There's lots of things, but we're going to go over the top 3 for you here. So define your exit strategy. Why are we starting there? Because think of it like this. Well, when you go into a movie theater, one of the first things that you should know is where are the exits? Well, what if there's a fire, right? So the first way to, whenever you're placing your trade, the first thing that you should do is define your exit strategy. Your plan should include multiple types of exits. I like to have profit targets, set stop losses. I'll have a mechanism for how I'll raise my stop loss. I call it a backstop. And something else that's time bound. Some people like to use trailing stops. I just told you that I like to use danger signals, but you really want to have 4 ways to exit the trade. Next, risk management. You never want to leave risk to chance. Your plan needs to spell out how much of your capital you're willing to risk on each and every trade, and as well as when to pull the plug. So, how much capital are you willing to risk? In general, I like to risk about 1%. That's on standard average trading, right? Up to 1%. Often I'll end up risking a lot less because, well, for a variety of reasons. But 1% is my average that I'm looking to go for. And I'll either get more aggressive if the market is very favorable, or I'll reduce if the market is unfavorable. Kind of goes back to that thing that we were talking about in the first part, where we're looking at general market structure and system and performance. All of it all fits together, and this is why it literally pays to have a plan. So number 3, predefined rules for different market conditions, right? Great segue there. So the plan should account for different market behaviors. Trending markets, volatile swings, and even quiet periods each require different approaches. So, for example, we've been in a choppy market. In a choppy market, maybe you're tightening up your stops. Maybe you're adjusting your position size because it's been a chop fest, and sometimes breakouts are working, sometimes they're not working. Or maybe you have a different strategy and maybe it's working in some ways, maybe it's not working in other ways. So you want to adjust your sizing and your risk for the different market conditions that you're in, that you're experiencing. Here's a bonus one. Here's a 4th one. And again, there's plenty that you're going to want to put into your trading business plan. But just to give you a little bonus here, number 4, you want to have your metrics for success. You want to include specific metrics to evaluate the success of each and every trade. This could be things from real simple, like the reward to risk ratio, the percentage of profitable trades. Well, what's your win rate? What's your total return over time? Those are just a few things. There's plenty more that I track, but those three right there, knowing the reward to risk of every trade that you're taking, your win rates, and your total return at the barest minimum. If you're just getting started, you want to have those. Again, there's a bunch more as you get deeper in, and you want to really do well and turn this into a real business for yourself. So let's move on to overcoming the what ifs with your plan. Overcoming the what ifs. So addressing the fear of missing out, your FOMO. So if your plan says to exit at a certain price, but you're worried that, you know what, the stock might continue upward, or maybe the stock is about to fall apart, what you need to do, of course, is stick to your plan. Remember that your goal is to make consistent gains, not catch every single market move. And when you have your business plan written out, right? Because if you noticed that the plan that we outlined is a lot more than just where am I going to get in, where am I going to cut my loss, and where's my profit target. We discussed a bunch of other things just a moment ago. You want to have all that in your plan, and if you write it out yourself, it makes it a lot more concrete than just cracking open a book or watching some video or even signing up for somebody else's service. All those things can help. All those things can help shorten your curve until you get to profitability, but you can't sidestep having your own written plan. This is where so many people get lazy, or they just don't know. So don't let that be you. Write out your plan, and trust me that it's going to be so much better for you, and you're going to end up performing so much better as a result. So some people stay in trades a little too long because they're scared of regret. They're scared of what if I sell and price goes higher. But if you stick to your plan, you'll avoid larger losses, and you'll also avoid when things begin to turn. Here's something else. Consistent execution will build your confidence. It's just like a habit, just like any kind of habit. We all have habits. We have good habits, we have bad habits. So what you want to do is build in consistent execution of your plan, and that's going to build the muscle. That's going to teach your brain that, hey, I'm somebody that follows through on my plan. And part of your plan, right? And here's an extra bonus for what you want to put into your plan. You want to have an evaluation period for your plan, right? So that way it tells you, hey, on this date, this time, here's how I'm going to evaluate the plans, and here's how I'm going to start thinking about upgrading my plans, right? Because it's a continuous process. It's a living document. It's something where you're going to continue to get better. So bake that part in right from the get-go. Yeah, and that's something that's going to help you quite a bit too. So let's see what questions you guys have, and we'll open up the floor for questions. And if you want additional help in setting up your trading business plan, you could go and check out this book right here. It's called The Trading Success Blueprint. I wrote this book for people like you that are interested in writing your trading business plan. I know that the idea of a business plan might sound a little scary if you're thinking, you know what, not much of a business person. I don't know the first thing about writing a business plan. You're not alone. But trust me, it's not rocket science. I wrote this in such a way where it's easy to follow. It's easy to follow it step by step. There's a template that you could get here. And I'm going to post this, the link to this book into the chat so you can go get it. And depending on where you're watching this, you might already have the link to it in the description. Like if you're watching over on YouTube, I think that it's there. I believe it might be posted over on Facebook. Probably not on Twitter, but you just got the link there. And you guys over on Twitch, you guys have the link now too. So any questions that you guys have, I want to hear from you. I want to hear what's your biggest challenge when deciding to sell. Drop your comments and your questions into the chat, and let's walk through it. Okay, let's see what questions we've got. So the question that came up, and again, this is a question that was this whole talk was inspired yesterday from a question that came up about this stock here again with BIRT. And the question about when to sell and a market getting iffy, it's it's so much easier to know when to sell by having your plans laid out in advance. And well, one of the things that I talk about too, and here's another book that might interest you. It's called The Trading Mind Wheel. And The Trading Mind Wheel is a book that I wrote last year, came out last year, and it outlines the 8 essential skills for trading mastery. So if you haven't picked that one up yet, go get that one. I talk a lot about trade management in that book too. So if you need help with trade management, answering the question when to sell, I outline my process and I outline the different types of skills that we talked about earlier. It's all in here. Mark Minervini, you might recognize his picture down there. He wrote the foreword to The Trading Mind Wheel, and I was having dinner with him when I was at Myrtle Beach a couple of weeks ago, and he told me something that I didn't know. He told me that he has been approached by a lot of people to write the forewords to their books, as you might have mentioned, as you might imagine. And he told me that he's only written 2 forewords. One of them happens to be this one here for The Trading Mind Wheel. So if Mark believes in this book and thinks how great it is, then I think that, that's I don't think that I could ask for a better vote of confidence from anybody in this space, even though there's plenty of other people that have said great things about it. Mike Webster, Leif Serrata, who's also a U.S. investing champion, and a number of other people here that have said wonderful things about the book. So go grab a copy of The Trading Mind Wheel, and I'll put the link to The Trading Mind Wheel into the chat here as well. All right, so now you guys could go get that book. Are there any other questions that you guys have on when to sell? All right. If there's no other questions on when to sell, do you have any other general questions that I could help you with? Any other questions about various trading skills, right? So mindset, or journaling, or psychology, back testing, all these things, specific trades. So a question come in from Alberto. Alberto says, when to sell? What if you're a position trader? Excellent question. So, when should you sell if you are a position trader? Again, so that's it's another thing, right? So this blueprint, it's not just if you're a swing trader, and it's not just if you're a day trader or a position trader. Having your business plan, that's for everybody. So that's the thing that's going to help you figure out, okay, here's my plan, and here's how I'm going to sell. Now, if the here's some of my thoughts on how to sell if you're a position trader that I learned from William O'Neill. Right? So, uh, O'Neill was a master position trader. He would be able to ride trades up for several hundred, several thousand%, and add to them and be long. At one point, he was just long Apple and Google back in the early 2000s. And he was fully margined on those stocks as well. So when you're a position trader, you're not buying everything all at once, right? Like, so O'Neill didn't see, oh, here's Apple, let's plow into it, and that was it. No, he was able to be fully margined on just Apple and Google by adding as price moved up along the way. So how did he know when to add? A couple of things. You need to understand what's a primary base, right? So what's the main thing that's going to get you into a trade? And then you need to know when is a good time to add to the trade. So let's go back in time a little bit and take a look at Apple. Where did the price go? All right, so back here. Right, so if O'Neill is buying here, and there were many splits along the way. So if O'Neill is buying here, right, this is a cup with handle. I would imagine that would be one of the spots that he bought, if not where he started the position. So if O'Neill is buying here, where is he selling? Where is he adding? So one way that O'Neill would manage a position trade would be to sell on a bad break of the 50-day moving average. So this red line, just I'll turn off the annotations and get rid of the danger signals and some of this other stuff on the chart, make it a little cleaner. So if O'Neill is looking at that red line and he's like, you know what? I'm going to hold until I get a bad break. And that's one of my big rules. So the first break was right here. Was this a bad break? Was that a bad break? I would argue no. Even though a price had bounced off of the 50-day moving average here, it moved up, and then it closed on its lows on the day, closed at its lows for the week. Was that a bad break of the 50-day moving average? Not really. Not really. The reason why is because one of the things that O'Neill would also do is see where price is at, see where it's closing for the week, and also look to the left. If you look to the left where I just drew that other line, you have all this price action right here, right? So because of that, price is arguably at a support level. So at that stage, he would be a holder. Perhaps he's moving up a stop on that, but at that point, he's a holder. So the following week, you're still under the 50-day moving average for a little while, but you're starting to move back up. Then what happens? You end up forming another cup with handle, right? And it forms that outline, right? And not only does it form that outline, but in both of these, you have the proper volume profile, because one of the things with the cup with handle, you want to see a dry up in volume in the handle area. Notice how volume dries up in the handle. And also back here, how you start to get some volume declining in the handle. And then when you break out, volume picks up and it gets heavy. And same thing over here. When price breaks out, you have an uptick in volume. Right? So then you continue. And we won't go through the entire chart, but I think that you get the idea that this is how he may have added, and you see price come back in and then leap again. And you could use the 50-day moving average as a guardrail for some of these moves. And I would encourage you to test these rules out for yourself. One of the great things about so many of these charting programs is that you could go back in time and use a replay feature and then trade this in like it's happening right now. Right? So we could zoom in on this and advance it day by day. And you could open a whatchamacall, a paper trading account, and you could trade this, or you might even just have a spreadsheet where you're keeping track of this. Okay, I enter on this move here. Right, so I'm in, and then maybe you're monitoring your P&L, and you're like, wow, look at this, I'm up 17%, and then price advances. I don't know why it's taken a long time, but now you're up to about 18-20%. And then you're pulling in, and you go from being up 18% to being up only 6%. And so that way you could start to feel, well, what's that really like? A lot of people don't bother to do that. A lot of people will crack open a book and say, oh, yeah, you know what? Holding that's pretty easy. But when you actually feel being up 20% and then being up 6%, a lot of people have trouble stomaching that. Doing something like this can help you. Let's see, what other questions do we got? We're a little bit over time. I hope that answers your question, Alberto. We're a little bit over time, but that's okay. I'm happy to stick around for a little while. It looks like we've got a lot of people here with us today. We've got 151 people across platforms. A lot on X. Hello to all my friends over on X. We've got a bunch over on YouTube. Hello to my YouTube friends and family. We have, let's see, nobody over on Facebook. That's interesting, but well, we've got a bunch of people all over the place. Alberto, many thanks, Mike. You're welcome. So is that it? Are we good? Let me know. I'm happy to stick around, but if there's nothing else, then there's nothing else. Again, go get yourself a copy. Go get yourself a copy of the Trading Success Blueprint. It's going to help you to write your trading business plan. It's going to give you templates. It will be a bit of work. The book is short. The book is relatively short. This is an ebook. It's about 50 pages. Then, if you want the templates and my plans and all that stuff, that's another 50 pages or so. And you'll be able to write your whole business plan with these things. And it will take you a little bit of time, but it's going to save you a lot of time. And the reason why is because when you're staring at a chart, you're not going to wonder, what should I do? You're going to know exactly what to do. And so go get this. I'll post it into the chat one more time for you guys. All right. And I think that is about it for the day. So I'd love to say thank you all so much for joining me today. It's been great. And I hope that you have a wonderful weekend ahead. Take care, much love, and God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.